Hello and welcome to this deep dive.
Hi there.
Today, we're tackling a really big topic, something with potentially significant impacts for, well, all of us, really.
hmm
The Bank of England's recent decision to cut interest rates.
That's right, a significant move.
And to help us really get under the hood of this, understand the ins and outs, we're very lucky to have a leading economic analyst with us. You might recognize his insights from Westferry Times.
Glad to be here.
Thank you for watching Westferry Times, by the way. It's James Carter.
Thanks for having me.
So together, drawing on your expertise and information from sources like Morningstar, latest news and breaking headlines, The Sun, OT News, our mission today is really to go beyond just the headlines.
Absolutely. Dig a bit deeper.
Yeah, we want to understand the reasons behind this cut, look at the potential ripple effects, across the economy.
And how it all fits together globally.
Exactly, how it fits into that bigger, complex, global financial picture. So
Yeah.
great to have you with us.
Pleasure to be here. It's certainly a development with quite a few layers to unpack.
Absolutely. So, okay, let's start with the basics. The core question I think many of us have. What exactly did the Bank of England do? And sort of what's the main reason given?
Okay. So Bank of England lowered its base interest rate. It went from 4.5% down to 4.25%.
Okay.
Now, for anyone less familiar, the base rate is, well, it's basically the key rate commercial banks borrow from the central bank at. And that influences all the other borrowing costs you see everywhere else.
Right. Trickles down.
Exactly. And the main motivation for this cut, something we've talked about recently on Westferry Times, is really a growing nervousness about the pace of economic growth.
Ah, so growth concerns.
Yeah. And these ongoing uncertainties globally, particularly trade dynamics with the U.S., they're definitely weighing heavily on the bank's thinking.
So the basic idea is make borrowing cheaper to try and give the economy a bit of a boost.
Precisely. That's the core mechanism. Lowering rates makes it more attractive, in theory, for both people and companies to borrow money.
For businesses, cheaper capital might make that investment project look, more viable.
Makes sense.
And for consumers, cheaper loans for big things like houses or cars could free up money to spend elsewhere. It's all about stimulating demand, encouraging activity. And this isn't the first cut we've seen recently, is it? Feels like there's been movement for a little while.
You're absolutely right. This is actually the second reduction this year.
Okay.
As we covered on Westferry Times back in February, the rate was cut then, too, from 4.75%.
Right.
And what's quite interesting now is the chatter about further cuts. Some analysts are predicting rates could fall, maybe by another full percentage point over the next 6 months or so.
Wow, a full percent.
Yeah. If that happens, we could see rates dip below 3% for the first time since October 2022. That'd be a pretty significant shift in policy.
Definitely. So, okay, with maybe even lower rates coming, let's dig into the signals. What specific economic signs were flashing red, prompting this concern and this action?
Well, there were several key things, I think. First, inflation. It dipped unexpectedly in March down to 2.6%. Lots of outlets picked up on that.
Lower than expected then.
Yeah. Now, projections do show it might temporarily rise again, maybe towards 3.7% because of energy and food costs.
Right, those volatile elements.
Exactly. But it seems the immediate worry has shifted. It's more about heading off a potential wider economic slowdown.
I see.
We're also seeing labor market data suggesting hiring intentions are weakening a bit.
Which is a forward-looking sign.
It can be, yeah.
Yeah.
Signals a potential cooling off down the line. So it looks like the fear of a bigger downturn has, for now at least, trumped the concern about that short-term inflation bump.
And you mentioned the global picture earlier. It's clearly not just domestic factors, is it? What's happening overseas seems to be casting a pretty long shadow.
Oh, absolutely. Our discussions on Westferry Times often come back to this. Global dynamics are crucial. And U.S. trade policies are a really prime example right now. As we've analyzed, these sort of aggressive tactics have created a lot of uncertainty in global markets.
Rattled things a bit.
Definitely. And that kind of instability, it tends to chip away at confidence. Businesses thinking about investing, consumers considering big purchases.
They hold back.
Yeah, both in the UK and elsewhere. Plus, these tensions contribute to a general slowdown in international trade volumes.
Okay.
So all this external pressure makes the Bank of England more inclined to act preemptively, try to shield the UK economy a bit from those potential shocks.
Right, build some resilience. So, okay, rates are coming down. For many people, the first thought is borrowing, mortgages, loans. Sounds like potentially good news.
Generally, yes.
Yeah.
That's the expected effect. When the base rate falls, commercial banks' borrowing costs fall, and they usually pass some of that saving on.
So cheaper mortgages.
Potentially, yes. Makes borrowing more affordable, could encourage spending on big items. We've already seen lenders like Barclays, HSBC, nationwide cutting mortgage rates. The Sun reported some fixed deals are now below 4%.
Below 4%. Interesting. But what about the flip side? Savers. What does this mean for them?
Yeah, that's the less positive side for savers, unfortunately. In a low-rate environment, returns on savings deposits tend to fall.
Lower interest on savings account.
Exactly. Banks just have less incentive to offer high rates when the benchmark rate is low. So borrowing gets cheaper, but saving becomes less rewarding in terms of interest.
So savers might need to look elsewhere.
Well, for those seeking better returns without huge risk, it might be a time to explore other, maybe lower risk investment options. Carefully, of course.
And businesses, how do they typically react? Does it genuinely spur investment?
It can be a big incentive for businesses. Lower borrowing costs make capital projects, new equipment, expansion, R&D look more attractive financially, less costly to fund.
But are there any downsides for businesses?
Well, one area we discussed on Westferry Times is the banking sector itself. They might actually face some pressure on their profit margins.
Ah, because they earn less interest income.
Precisely.
Yeah.
Lower rates mean less income from the loans they issue.
So it sounds like some specific sectors feel these cuts more than others.
Definitely. The housing market is often very sensitive. Cheaper mortgages can boost demand, potentially leading to more activity there.
Right.
And conversely, as we just said, the banking industry faces that challenge of navigating potentially lower interest income.
Okay, so looking ahead now, what's the general forecast for the UK economy after this cut? Is there optimism?
The picture's still a bit murky, honestly. The IMF, as reported by latest news and breaking headlines, actually revised its UK growth forecast for 2025 downwards recently, from 1.6% to 1.1%.
Oh, okay. So the cut is trying to fight against that trend.
Clearly, yeah. The bank's decision is an attempt to counteract that expected slowdown.
But its success isn't guaranteed.
Not at all. It really depends on so many things. Global economic conditions, how effective domestic policies are. A lot is outside the UK's direct control.
And are there risks if the bank keeps cutting rates? Could there be negative side effects?
Oh, yes. Absolutely. Potential downsides to watch. While the aim is growth, relying too much on rate cuts can backfire.
How so?
Well, one big worry is fueling inflation down the road. If borrowing gets too cheap and spending overheats, you could see prices pushed up across the board.
Right.
There's also the risk of asset bubbles, like in the property market, perhaps if very low rates encourage too much borrowing and speculation. And another thing is, if you keep cutting rates, you have less firepower left. It reduces the central bank's ability to respond effectively if another crisis hits, because rates are already so low.
That makes sense. Limited ammo. Now, it's interesting to see how this fits globally. Are other central banks doing similar things?
That's a really crucial point.
Yeah.
OTE News reported that central banks worldwide are actually cutting rates at a speed we haven't seen since the 2008 financial crisis.
Wow, really? So it's a global trend?
It seems so. This isn't just a UK thing. We're seeing similar moves in places like the US, for instance.
And why is everyone doing it?
It seems to be these broad economic headwinds, significant geopolitical uncertainty. It's forcing policymakers everywhere to act quickly, try to bolster their economies against these potential shocks.
Is there any sense they're coordinating this? Or is everyone just reacting independently?
Well, there isn't usually like a formal announced global plan for rate cuts.
Okay.
But central banks do watch each other very closely. They monitor each other's actions. They look at the same global economic data.
So they end up moving in similar directions?
Often, yes, especially during global downturns or periods of high uncertainty. They're all reacting to a similar set of global pressures, even while considering their own domestic situations.
Okay, so bringing it back to our listeners, what's the key takeaway or advice you'd offer someone trying to navigate this?
Well, for consumers, this could be a good time to review your finances. If you have loans, a mortgage, maybe explore refinancing. See if you can lock in a lower rate.
Take advantage, potentially.
Potentially, yeah. But also be aware that returns on savings are likely to stay low or even fall further.
Right. And for investors?
For investors, I think the watchwords are caution and diversification. Given the volatility and uncertainty out there, spreading investments across different types of assets is generally a wise move to manage risk.
Some really valuable insights there. Thank you so much for breaking down what is, a pretty complex issue for us.
My pleasure. It's definitely multifaceted.
But understanding these underlying dynamics is just so important for everyone, isn't it?
Absolutely. It's important for people to have a grasp of these forces that, shape our financial lives.
Well, thank you for joining us for this deep dive into the Bank of England's interest rate cut. We really hope this chat has given you a clearer picture of what's going on, the factors involved, and what it might mean.
Hope it was helpful.
We definitely encourage you to keep exploring these economic complexities and how decisions like these can ripple outwards.
Indeed. Staying informed is really key in times like these.
And on that note, here's a thought to leave you with. How might the individual financial choices you made today, maybe subconsciously, be influenced by these much bigger global economic trends and the moves central banks are making? Definitely something to ponder.
Good question to reflect on.
Thanks again for your expertise today.
Thank you.
And thank you all for joining us for this deep dive. Until next time.